traders, and welcome to a fresh trading week and a new trading month. Okay, so last Friday in the US we actually did have some top tier important economic data that came out, and that was US PCE inflation data, the monthly data, which is the Fed's preferred inflation gauge. Now that data on Friday came out year on year at dropped down to 2.5%, 2.5%. Which is around the lowest that the inflation data has been for 4 years, and obviously getting super close to that 2% mandate of the Fed. So normally the market would cheer this sort of inflation data, but we really didn't see that happen on Friday. And the simple reason for that is the market is looking at this data at 2.5% as being a cycle low. So they don't expect this data to go much lower. In actual fact, they're looking for this data over the next couple of months actually to go back up towards 3 and above 3%. And so the reason for this is quite simply tariffs. They're expecting tariffs, finally to start impacting into inflation data. So, next months ahead, it's going to be very interesting to see exactly how that plays out. Now, speaking of tariffs, after the market closed on Friday, Trump did come out with some tariff news. So he's increased the tariffs on steel and aluminium, doubled it up to 50%. Look, it wasn't totally unexpected, but certainly it is not a popular tariff. Even here in Australia, we export about $1 billion worth of steel and aluminium to the US. So it is definitely a negative tariff here locally. But look, just with tariff news, we have been getting a lot of confusing signals regarding tariffs, especially what's been going on with the court case. Are they legal? Aren't they legal? Will they happen? Look, I think that even with Trump on the weekend increasing the tariffs on steel and aluminium, shows that look, they're not going away, and that also Trump will find a way, regardless of what the courts say, to implement this tariff policy. So if you are trading, I certainly would not be getting putting on long positions for thinking that you're going to get some good tariff news. Now there was some other news that happened just recently before markets opened. And that's what's happened between Russia and Ukraine. Ukraine has bombed 4 different Russian military sites, and effectively it was their biggest military operation since the war started, and they've effectively blown up 40 Russian bombers, and the damage estimate of what they've caused is upwards towards $7 billion US. So when Trump has been trying to get both sides to the table and to negotiate peace, we're actually moving away from that in a big way. When Putin was asked about what his response would be, he just came out with one line. He said, "Wait until tomorrow." So I would say that I would not be short gold in the short term. The Russian response to this certainly could be something way bigger that we've seen for a long time. So, excuse me. So what's been happening with Russia and Ukraine certainly has potential to influence the market. And since we've opened up, gold did jump up $20 straight away. It has been range trading at the moment, gold, for the last month or so. 3,200 on the downside, 33, 50, 60 area on the top side. So a wide $150 range has really contained most action. Technically, when a market range trades for extended period of time, when it breaks that range, you do see a violent breakout. So look, I'd say that if we did see gold go up and break above that 33.50 area, certainly we could see those record highs back at 3,500. I retested that in play. But look, this is a very headline-driven market, and at the moment, what's happening with Russia and Ukraine certainly could influence the gold market in a big way. Okay, this is there isn't quite a bit on this week. We do have some central banks meeting. We've got Bank of Canada on Wednesday. Market does, on balance, look for them to leave rates unchanged at 2.75%, but there is a certain part of the market that believes that they will cut this meeting again by 25 basis points. So a bit of indecision on how the Bank of Canada is going to play out. But on Thursday we've got ECB meeting. It looks like it's pretty much a done deal that they will cut rates by 25% and the deposit rate down to 2%. Market further out still is pricing it at least another 2 rate cuts by the ECB, taking maybe the terminal rate down to around 1.5%. So central bank meetings midweek, and then end of the week we do have some important labour data, the non-farm payrolls out of the US, and potentially we might see the unemployment rate go up from 4.2. The risk is it goes up to 4.3%. So we do end the week with some very important data. Good luck with your trades, and we'll catch back in with you shortly.